Hello and welcome to BQ Prime. I'm Hiral Dadia. Overall, if you see in terms of markets, clearly the pressure has continued in today's session as well after the kind of moves that we saw in yesterday's session. Clearly, almost a 200-point decline coming in terms of Nifty 50 and major pressure coming in from the banking counters as well. 680 points is the kind of drop that we are seeing overall in terms of Bank Nifty as well. Reliance Industries has been an interesting stock that we've been watching out for. Overall, in terms of discussing which are the movers and shakers in trade today and what you should be doing, Abhishek Jain, Head of Research at Arihant Capital, joins in. Arihant, overall, Abhishek, welcome to the show and a very good morning to you.
Good morning, ma'am. Good morning, Hiral, ma'am. And I hope you are fine.
Absolutely. Thank you so much. Abhishek, my first question coming to you is with one of the heavyweights, which is Reliance Industries, right? Last couple of sessions, we are seeing selling pressure that's building in on the counter, and it's stuck in a broad range. In fact, from a technical perspective as well, a lot of shorts which are being created at 2,100 and 2,000 strike price. What's the view that you have on a Reliance Industries?
So our view on Reliance is, ma'am, positive only. We believe key Reliance is right now for it's more of a trading range bound, which is 2,300 to 2,600. It has been trading for last 4 5 months, and despite uh, numbers and all the positives and negatives we have seen, and like most of the positives only, the stock has not been able to breach 2,600 odd levels. On the positive side, one is what is happening in the company right now. They've been talking about this stock is right now on the. There's been some GRM improvement we have seen in last quarter and from the last quarter things, and on the negative side, people there's been a correction in the crude. Uh, what we like about Reliance is basically from a B2B business, it has been transitioning into a B2C model, and where Reliance has a forte. And on the telecom side also, there are news there. Bharti has increased in the base price in the half of the markets which they have been there in right now. Eventually, our view is basically Reliance is going to follow it soon only. Reliance being the competition right now, and Reliance has doing a much larger investment in the 5G. So we think on the 5G side, Reliance is going to gain a substantial market share. Then from the migration we are going to see from, especially on the Idea Vodafone, about the large Chennai base right now, because Reliance is generally the low ARPU kind of business, where I think there will be a substantial improvement is expected on the Reliance side right now. I think on the retail side also they've been doing extremely well. They been one of the largest retailer in the country right now. I think Reliance is definitely a portfolio bet. Not trading wise, you can buy close to 2,300 odd levels, but I think that's a stock we should definitely keep in the portfolio side.
Right. So you're saying basically from a valuation perspective as well, current levels would be a good uh, opportunity to start adding Reliance to your portfolio?
Definitely, ma'am. Definitely, our view is Reliance is at close to 2,300 odd levels can be a very good opportunity to enter it for the long-term investors right now. If market and what we think is like this is whenever the Nifty is going to, you are going to see a recovery in Nifty. Reliance is going to lead it at some point of time, and that will happen. It has relatively has not corrected also much. It has been able to safeguard its 2,300 odd levels. What is there right now? Technicals, if as per our technical team, if it reaches 2,300 odd levels, so you may see a further downslide. But
Mm.
for an investor, it should not be a concern. And if a 10% correction happens, it will be definitely a much better entry point for a long-term investor. So I think for an Indian market, we don't see Silicon Valley banks kind of crisis are going to happen and any impact on the Indian market right now. So on overall basis, that's the one thing which we've been keeping a track on this thing, because is it a start of a global credit default?
Mm.
This is an event. If that is going to correct, then obviously you'll get some of the stocks at a higher, much lower level. But at this point of time, I don't think so much impact you are going to see in many of the companies.
Right. Right. Moving on in today's session, you're seeing a lot of pressure that's coming in from the HDFC twins as well. If you see HDFC as well as an HDFC Bank, both are down little over 2% in trade and almost to the 700-point decline that we are seeing on the Sensex as well. Or you're seeing almost a 240-point contribution that's coming in from HDFC twins. What's the view that you have on both these counters?
Ma'am, one announcement which I think is like Reliance, HDFC side, what exactly is happening right now? People are last few months, we have seen outperformance from the HDFC, especially with the merger benefit synergies are going to be paid out right now. One concern which I think on the HDFC side is there right now is now Reliance Geo Financial has been coming into the market, and they are talking about a 1 lakh crore market book in next 3 4 years. If this is going to happen, this is obviously they are going to gain market shares from the existing players. I believe it's a very big market, and there are if 10 more players are also come, there is a room for 10 market. The kind of India credit growth is there. Obviously, there will be some pressure on the margin. I think that's the one reason. But apart from this, I think the one biggest positive for the HDFC side you are going to see is their cost of credit, cost of lending is going to come down substantially after the merger with the mergers and the synergy arising from the HDFC Bank. So I think that's the one reason. I think there may be some, and this is largely a foreign FI centric bank. So if you are seeing FI selling happening because of the global reason, so you may see some of the companies like HDFC Bank are likely to see selling pressure.
Right. Moving on, Tata Motors is one of the top gainers in terms of Nifty 50 in today's day of trade. Overall, with the auto sales numbers that have come in, the kind of EV push that we are looking at, and you have one of their units, which is Tata Technologies, which has filed a DRHP with SEBI for an IPO. How do you view the stock? Because Tata Motors in the end will be offloading 20% stake in the subsidiary.
Definitely, it will be positive for Tata Motor. But what is happening right now is like for most of the players right now, one concern is now there people are talking about slowdown, which I see there will be a surprise recovery, especially in the markets like Europe and China. Gradual surprise recovery is expected in the Europe, especially the kind of things we are hearing on the ground level thing right now. I am not going by what the media is saying. I'm talking to the companies there who are there, and they are much more positive relatively what it was a 4 month or 5 month back on the Europe right now. So point is right now the China recovery is also need to be concerned because China with they have a JV with the Chevy there. Uh, so that is one thing is there right now, and for most of the players right now, I think the global cost of debt is going to increase. You think free money was available? Why these lot of there is a risk of default is happening. Like I was talking to one IT company who has one major client they've lost one major client in the last January February, where they're talking about their cost has increased from 1% to 5%, 4.5%, 5%. Obviously, you are going to see some repercussion is going to happen despite a robust or relatively strong retail penetration we are seeing in the US right now. It will start pinching some point of time, and it is happening right now at this point of time. And with the Powell comment just 2 days earlier, that has impacted some on the US market right now. And with yesterday, so Tata Motors, we have a positive view. We think if someone wants to play, one can play via DVR is something where I believe, which is the discount is close to 50% will come down to 40 odd percent or 35% once the Tata Technology IPO will be through right now. So this is a stock which definitely you can keep on a radar.
Right. Moving on, you have a Equitas Small Finance Bank as well. That's in focus in today's day of trade. And overall, if you see in terms of performance, we are seeing pressure to the tune of almost 6.5%. Overall, clearly the new securities that have started trading from today's session. So the shares that rank pari passu in all respect with the existing equity shares of the company. So what do you make of a Equitas Small Finance Bank?
Ma'am, on the Equitas Small Finance Bank, if you see right now, that is basically one of the outperformer on relative basis in last 4 5 months. There are 2 3 positive triggers which was there right now for the company. I think one of the big positive was there. Mr. Vasudevan has announced he is not leaving the organization. And apart from this, there has been a transition. However, on the microfinance book also they have started doing very well, which is close to 20% of their books only right now. But it is converting into a fintech kind of lending system right now. When we met the management also, and as a broking house, we have a price objective of 76, which is we have initiated just few months back when the stock has 40 odd rupees right now. So I think that is on the Equitas side now. The people, if you see historically, some of the companies, some of the SFBs were getting 3 times book value. They're still quoting at a much lower valuation, and they've been delivering good setup growth right now. And obviously, there will be benefits of cross-selling opportunities which they are doing from the existing ecosystem. Also, there has been there right now for players like Equitas, even for the Ujjivan financials right now. So both we have a positive view on the Equitas Small Finance Bank and Ujjivan as a brokerage house right now. I think at current level, one can definitely look at Ujjivan Financial as a portfolio play also. Equitas has been today, maybe there may be some arbitrage guy who have bought the stock prior to the merger and must be selling is there. But I think close to 60 rupees, if you get an opportunity, definitely worth looking.
Right. Moving on from the financial space, you have a Manappuram Finance as well, which is seeing a good run over the last couple of trading sessions, in spite the markets being under pressure. If you have to take into consideration the way gold has been moving, in terms of how the third quarter numbers have panned out and the succession plan that the management has been discussing right now, what do you make of a Manappuram Finance as well, specifically from a non-gold portfolio perspective, because that's something which is absolutely crucial from here on.
So, ma'am, if you see last 2 quarters, let's talk about the non-gold. One important thing, what is happening in the Manappuram right now, the management has very clearly about the succession plan right now, which they'll be announcing. And just for your information, on 21st, they are holding an analyst meet also with the various investors and analysts on 21st. So if the feedback is and where there are a lot of heads and the CEO will be interacting with those things. So this is like their market is slightly positive on this thing. There will be some announcement is expected prior to this. Apart from this, on the core business, what exactly why I think is like they've been last 2-3 quarters were very good for the all microfinance company, and Ashirwad also they have started picking up very well right now. The book has been growing. There has been a recovery right now, and I think that is market has taken on the positive side. On the gold book also, what our view is after Q4 you are going to see a recovery because there is a concern the gold book is not growing. But I think, ma'am, it's a very smart strategy. If you see in last 3 quarters for a company like Manappuram, where they've been let go a lot of a lot of teaser loan book because last year a lot of gold loan companies have cut down their teaser loan book, which they are offering it to large HNIs or large customers at as low as 6.5%. So despite a cut down in book degrowth, they've seen on overall basis the yields have improved, their NIMs have improved, and I believe this traction will continue for at least 1 or 2 more quarters right now. And we won't be surprised after Q4 onwards, or maybe in Q1 onwards, you're going to see a book improvement. Because if you let go a lot of 10 customers, which is average 5 lakh kind of thing, right now the average book size is 50,000 for them. So you have to get 10 more customers to compensate this thing. And where you are getting a 15-16% kind of or 18% kind of yields. So it will take time, but it is happening right now. Last 2-3 quarters, I think it is. We are positive on both Manappuram and now post correction Muthoot also. I think both can be. One can have a definitely look. Some correction in the gold loan has gold prices have impacted. There has been a concern on their LTVs, but I think their LTVs are 65%. I don't think so. There will be much impact on overall basis right now for those players.
Right. Moving on from the pharma space, you have Ajanta Pharma that is in focus on the back of the buyback. The board will be meeting later on during the day as well to consider the buyback. And if they go ahead with the buyback, overall, I think this will be company's third buyback. I think the first happened in November 2020 with the second one in January 2022. What do you make of a NATCO, of Ajanta Pharma? Because clearly, from a Q3 perspective, the profits dipped by almost around 30%. So there was a major setback in terms of the numbers. What's your view?
Ma'am, what our view is right now is like in the management, there's been no recovery in the API prices right now as of now in US right now. US continue to remain under pressure for most of the companies right now. And so a buyback is a tool where they can redeploy or some of the cash for the uh, investors right now. So I think that's the one reason why the company is looking for a buyback, which is a quite a good sign if you see right now. And we think the buyback is expected to be in range of 1500 odd rupees. Need to see how exactly they are going to do it. Via market or via tender route right now. I think market route is also not bad if it supports the prices. We have seen in stocks like Infosys and some of the companies right now where buyback has helped the stock prices fallen till the time buyback is there right now. So I don't think so it's going to impact relatively much thing right now because I don't see is that the buyback cannot be more than 2.5% of overall. And there's a most highly likely the promoters will participate in that buyback also because promoters have sold the shares also recently at some 1170 odd level right now.
Mm-hmm. Right, and the stock is down almost 12% in the last 6 months as well. So no major uptick coming in on that counter. So that's with regards to an Ajanta Pharma. Overall, thank you, Abhishek, so much for joining us on the show and sharing the
Thank you,
views
ma'am.
with regards to the stocks which are actually moving the markets in today's session. Thank you. Stay safe and speak to you soon again.
Thank you. Thank you for inviting me on your show. Thank you.